To our channel StoxFactor. Hope you're doing well. First of all, wish you a very happy new year. Hope this year brings you a great success, and we wish that we become a great contributor to your successful trading journey this year. So friends, with that note, let's begin our analysis. So this video will specifically focus on indexes, and we will look at what the indexes data is saying as per the expiry data. So we already know that last week expiry happened. So we'll analyze the Nifty and Bank Nifty data from expiry point of view, and we'll see what can happen in the current series and also in the next week what are the levels for both the indexes. So friends, please watch this video till the end. This will be a very important video for you in which you will find some very key data points to learn so that you can do your own analysis in a very effective manner, especially the expiry analysis. So before we begin with our analysis, one important point to mention that this analysis is for learning purposes so that you can do your own analysis using our dashboard and identify high probability trades. So let's begin with the analysis of both the indexes, and we'll look in very detail how to do the analysis. So let's quickly jump to the index analysis page. Okay, so we are into the index analysis page and Nifty is by default selected. So let's begin with the important key levels. As we already know that the important key levels for the Nifty is that maximum resistance is at 18,000 and maximum support is at 17,000. So high level there is a 1,000 point range. Now let's look at the futures data, futures cumulative open interest data from the expiry point of view, because we will also analyze the expiry which happened last week. So we can see overall in the expiry, last expiry, long positions were unwinded because the price also fell overall and the open interest positions also fell. Now one important point to mention, as we have explained in our previous videos also, that this graph shows you the rollover cumulative open interest. By rollover cumulative open interest I mean that suppose this data point is of 30th December 2021, but the cumulative open interest shown here, that is around 10 million as you can see. So this is the open interest of the next and the far expiry, not of the current expiry, that is the December series. So we exclude the open interest of the December series because that is no more relevant for that data point because the expiry has already happened on that day, and whatever positions were created on the last trading day of the expiry for the current expiry, for example December, those would have been settled on the same day. So on the next day what positions will be relevant? The January and the February positions, that is next month and far month. So that's why we say rollover cumulative open interest. So please keep a note on this data point because we will discuss this data point in this video further and we'll see how to analyze the data. Now on the weekly basis you can see there was a short covering in Nifty because Nifty rise week on week and there was some short covering happened last week, and same can be seen in the daily data also. Now let's quickly look at the options data, starting with the PCR level, which shows us a healthy picture in both the overall PCR weekly and monthly, that the price rising and puts are being written more because PCR is rising, so more puts are being written as compared to calls, and this is in sync. So this is again a good signal that all the data is in sync and shows the same trend. Now let's quickly look at the important levels. As we saw 18,000 and 17,000 as resistance and support. We are talking about major resistance and major support. So this graph gives you the major support and major resistance. Right. Now we'll start with the option chain. On the last trading day, what we can see here, we can see that huge put writing happened at 17,300 and we saw some call winding happening at 17,200 levels, almost 27% reduction. So this is again a bullish signal that this zone 17,200 to 17,300 zone is acting as a support for Nifty. And we can also see in the total cumulative open interest that 17,300 has more puts than calls. Same we can see the put call ratio of 17,200, which is 2.16, that puts are almost more than double as compared to calls. So this zone is very likely to act as a good support between 17,200 to 17,300. So any immediate positions, if you see a dip in this range, putting a strict stop loss below 17,200, around 17,170, which will act as the first support level for the Nifty, we can take a position and we can put a strict stop loss. And obviously the next support is the 17,000 level, right? So in this way, we have identified the first support and major support. Similarly, on the higher side, the two resistance levels, first resistance level is 17,500 because we can see almost double the calls as compared to puts, and obviously the major resistance is at 18,000. So resistance range is higher. We can see first immediate resistance coming at 17,500. So this is a broader high level support and resistance level for the Nifty for the next week, right? Now we will analyze the futures cumulative open interest data, and we will also analyze the monthly rollover statistics data, which is very important, especially when the expiry has happened. So we have also taught in the previous videos that whenever you are analyzing the data on the next day of expiry, so we also need to consider this data. This gives us an overall macro picture on what is happening on index. So we'll start with the price. We can see that on the last expiry and the price of the previous 3 months, that is the average price of the previous 3 months expiry and the price on last expiry, there was a slight reduction. So the price closed slightly below average of the previous 3 months on the last expiry. Similarly, we can see futures cumulative open interest was a slightly below average of the previous 3 months, right? So it means we can see overall long positions were being unwinded. So this data is in sync with the picture which we saw here, that overall in the futures we saw long unwinding. So the monthly rollover statistics data is also giving the same picture, right? Now let's look at the rollover percentage. We can see the rollover percentage on last expiry was 78.91, which we can see here also, and the average rollover percentage of the previous 3 months, that is the taking the average of this number and the previous number, right? So all the 3 expiries, the average is 81.26. So this is 79% almost, 81.26. So there is not a major difference. We can say that the rollover percentage has decreased a lot. It is a minor difference of -2%. It is just below average, but not a major deviation from the average. So the rollover percentage is not giving us a very significant deviation here. Hope you understood this data, because this is very important. Now coming to the very important part, let's look at the last trading day. What happened on last trading day? And there is a catch here. This is very important for you to understand. So we can see that this column shows you the futures cumulative open interest, right? And the chart which we are showing above on the expiry on expiry, and this number is showing you the rollover cumulative open interest. So there is a difference between this futures cumulative open interest and this number, because this is the sum of the open interest of the next and far month. So to recap the discussion, futures cumulative open interest data is calculated by summing up the open interest of the current month. That is, suppose we are in the December expiry, so current month expiry plus next month expiry OI plus far month expiry OI, that is January and February, right? So this is how we calculate the futures cumulative open interest, which we show in our dashboard. Now coming to the rollover cumulative open interest data, it is calculated by summing up the next month OI, that is January, suppose we are in the December expiry series, and the far month OI, and this is only relevant for the expiry day. So this number is only relevant and to be watched on the expiry day in order to analyze the first trading day of the next series and the monthly rollover statistics data. So if we go to the dashboard, rollover cumulative open interest data is only shown at 2 places. This particular graph in which we show the expiry data point, suppose 30th December or 25th November, which was the expiry day, right? Similarly, we show the rollover cumulative open interest data in this table, and also in the weekly monthly, where we show the monthly rollover statistics. So these monthly rollover statistics are being calculated based on rollover cumulative open interest only. So need not to worry. So this is automatically based on that calculation only. So whenever you are analyzing this data, this analysis is already based on rollover cumulative open interest. The only thing to be taken care is that when you are analyzing the first trading day of the next series just after the expiry, you will compare futures cumulative open interest for the first trading day with the rollover cumulative open interest for the expiry day, right? We will now discuss how we can do that. Now let's look at the 31st December futures cumulative open interest data, right? So this is around 11,167,000, right? Similarly, on the previous day, on the last day of the expiry, the rollover cumulative open interest was 10,408,000, right? So we can clearly see that there has been increase in the open interest, right? So we will not look at this number, we will look at this number, and from this number, the futures cumulative open interest has increased, right? So overall, we can see that on the first trading day, new long positions were being created in Nifty. So this short covering is showing you with respect to this number, right? But overall on the next trading day, what happened? The rollover cumulative open interest, and this is the futures cumulative open interest. Now this includes the January, February and the FAR month, and this is also January and February. So overall we can see there is an increase in future cumulative open interest. So this is specially to be understood on the next day of the expiry. Only on the next day of the expiry you need to understand, because you need to give importance to this number on the next day of expiry. And now let's look at the price action also by looking at the candlestick chart of the Nifty in the TradingView platform. And we will relate this data with the futures cumulative open interest data in order to understand the overall picture what is going on. So here we have drawn some trend lines. This is the daily chart of Nifty, and we have connected the tops and we have also connected the bottom levels. And you can see a falling channel, and Nifty was making lower highs, lower lows, right? Now we can see what happened on the first day of the January series. That is the last trading day. The Nifty broke this particular channel and closed above this particular channel, right? So now we can see that clearly Nifty broke this channel, and we can see that this is accompanied by the long positions being created on Nifty on the first trading day of the January series, right? So the price started low price 17,238, went up to 17,400, closed around 17,354. That almost 150 point difference from the previous day, and which is accompanied by almost 7% increase in the futures cumulative open interest. You can take the difference and you will find the 7% increase in the futures cumulative open interest, right? So it means new long positions have been created in Nifty in this case. So now what we can expect here, right? We can see a breakout, but this is an early breakout. We have to get the confirmation. We have to see that this trend continues. So instead, if you are a positional trader, instead of taking position the very next day, please wait for a confirmation that this trend continues and then wait for a dip, right? So this is for a more conservative trader. If you are an aggressive trader, please keep strict stop losses if you want to trade on the long side, keeping a strict stop loss below the low price of the previous day, right? But if you want to be more conservative and want more further confirmation, please wait for the next day to get a confirmation for this particular breakout, and then wait for a dip to buy near the levels for this candle. You can buy in the range which we discussed between 17,200 to 17,300 levels, or just above 17,300 levels, and then you can put a stop loss below 17,200. So friends, the point which I wanted to mention here is that the previous day green candle is accompanied actually by the long positions. So with this, we have understood the important levels for the Nifty for the next week, and we have also analyzed the data with respect to the next series, right? Now let's quickly look at the Bank Nifty levels also. So friends, now Bank Nifty is selected. Let's quickly look at the major support and resistance levels. So the major resistance is at 35,500 and major support comes at 35,000. So there is a tight 500 point range. Now looking at the futures cumulative open interest. So let's start with the futures cumulative open interest expiry on expiry. We can see that on the last expiry, slight short positions were added in the Bank Nifty. And if we see on the weekly data also, we can see short covering happening in the last week. Now we'll analyze why this happened, that on the expiry basis, short positions were created, but overall in the last week, short covering happened. We can see short covering happened on the last trading day. So we get our answer here that the difference between the monthly data and the weekly data is due to the fact that the short covering happened on the last trading day, that is after the expiry. So whatever short positions were created here, the very next day short covering happened. Now we'll analyze in detail whether all the short positions have been covered or not. We will see that data in the detail, but before that, let's look at the options data. Now options data along with Nifty, it is giving us the same picture that the PCR has started rising with the Bank Nifty, and it means more puts are being written as compared to calls. Now let's look at the option chain in detail. So we can see here major put writing and call writing happened at 35,500 levels. So now we can clearly see almost a straddle at 35,500 levels for the Bank Nifty. Major support coming at 35,000, and again the next level resistance coming at 36,000. We will take this strike price, that is 35,500, as a straddle, and We will take the resistance level for Bank Nifty as 36,000. So for the next week, if we want to trade for the next week, what our range would be, because 35,500 has a straddle, we will look at the weekly option premiums for 35,500. So let's look at that quickly. So 35,500, we can see 374 is the call price, and we can see the put price is around 365. So almost 700 points we can say on a high level. So 700 points on the downside and 700 points on the upside. So this is the high level range for the Bank Nifty to trade. So if you want to play more conservatively, so you can wait for a dip almost more than 500 points on either side, and then you can put a strict stop loss to. So suppose 35,500 is the level. We'll wait for a dip up till 35,000 and we'll put a stop loss below that, and we will take a long position. And also on the reverse side, if the Nifty goes up to 36,000, we will take a position on the bearish side, putting a stop loss above 36,000, that is near around 36,100 to 200 levels. So if we talk about risk reward, so our risk reward will be at least 1:2, because we are putting a stop loss of around 150 points is our stop loss, and we are looking for a profit of at least 300 points. Right, so we have to wait for these levels. Please don't trade between these levels, because it will not give you a very good risk reward ratio. Now friends, let's also analyze the Bank Nifty data, the rollover percentage. Now look at the data for Bank Nifty. This is far more clearer as compared to the Nifty data. We can see that the price fell. Futures cumulative open interest is more than average. There has been increase in the rollover percentage, right? So it means short positions were being created on the last expiry, and we saw that in the graph also of the expiry on expiry trend, that short positions were being created. So this is very much in sync. So if you analyze the data in detail, you will find that the data gives us the clear view. It means the Bank Nifty has seen short build-up in the previous expiry. Now let's analyze the last trading day. Let's look at the futures cumulative open interest on 30th December, that is 2830. But on the same day, the rollover cumulative open interest is 24 lakhs. So this is 28 lakh 30,000. This is 24 lakhs, right? Now on the next trading day, we will compare it with this one. So 24 lakhs and 24 lakh 62,000. So on the futures cumulative open interest basis, we have seen short covering, but from the rollover point of view, this is important. We have seen some slight long positions being added in Bank Nifty, and with that the price has risen. Because the price has risen and the cumulative open interest has increased, so we can see that overall slight long positions have been added in the Bank Nifty. So this is very much similar to what we saw in the Nifty also. And we have seen huge put writing as compared to the call writing in Bank Nifty. So it means on the last trading day, we have seen a bullish view, slight bullish view on the Bank Nifty. Now let's look at the candlestick chart also for the Bank Nifty, and we will see the important support and resistance levels. So this is the daily chart for Nifty, and we have added the 20, 50, 100 and 200 EMA for the analysis. So we already saw the Bank Nifty broke the 200 EMA in the previous expiry, which was accompanied by the short buildup, right? And we also saw that there was a short positions were being created in Bank Nifty. Now we can see here the Nifty took support at this particular level. We can see a support. Previously also we saw this support, and the Bank Nifty respected this particular support for the third time, and the Nifty bounced from these levels. We can see here this candle and this candle bouncing from this level, right? And now if we see this particular channel, the small channel being observed here, you can see this is a slightly rising uptrend, right? And the Bank Nifty slightly closed above 200 EMA, right, in the daily chart. Now friends, let's look at very important the weekly chart also, because if we are a positional trader, we have to also look at the weekly chart, what weekly chart is showing us. And clearly you will see here in the weekly chart, we can see the uptrend channel. We can see the prices on the uptrend, right? We can see 20 is above 50, 50 is above 100 and 100 is above 200. Now let's look at here what happened on the last 2 weeks. You can clearly see that the Bank Nifty bounced from 50-week EMA, and similarly now it has closed above 50-week EMA, right? So this is also very important to understand that from the positional point of view, we have to also see the weekly graph, and if we relate the price action with the derivatives data, it becomes a very good combination and it gives you more confidence. Whatever trend you see in the chart, it is backed by the data, right? So this is very important. When you see such scenario, this gives you more confidence to take high probability trades. So in a nutshell, if we talk about the view for the indexes for the next week, we have a cautiously bullish view in both the indexes. And friends, last but not the least, we have to relate the indexes data with the FIIs data also, what FIIs are doing. So as we discussed that slightly long positions were being created in Nifty and Bank Nifty both. And now clearly you can see here that FIIs data is telling you that. So we can see in overall index, they have increased their long positions on the last trading day. So we can see the long short ratio, it increased by almost 1.5%. You can see the total contracts increased on the long side for the index. So index includes Nifty and Bank Nifty both. So we can clearly see a correlation with the long positions in Nifty and Bank Nifty with the total increase in the contracts of FII's positions. So this is how you make a correlation which gives you confidence, and then you are in a position to take a good and effective trade. So friends, in this way you have to analyze the data, you have to correlate the data and then build a holistic picture of either an index or any particular stock. Hope you liked our analysis. Please give a thumbs up if you like that. And if you have any questions regarding this video, please post your questions on the comment section and we will definitely answer your questions. And if you have not subscribed to our channel till now, please subscribe to our channel so that you can get the notifications of such videos which we post every week, so that you can learn how to do your own analysis using the derivatives data, which is very important, and then relate it with the price action, which gives you a more deadly combination and gives you more confidence. And if you want to get the access of our dashboard, please visit our website www.stoxfactor.com for more details.